Thursday's market closes mixed in grain and livestock futures trade. Arlen Suderman with StoneX Group is joining us. And Arlen, let's talk a little bit about the grain trade. First of all, wheat market started off strong today and then set back. And did we just see some profit taking, or why weren't we able to extend the rally?
Yeah, the market's been really having difficulty digesting what the wheat fundamentals are. We have big supplies of wheat listed on the balance sheet. A lot of those, about a half of those, are in China. It really don't matter to the world balance sheet. Exporter supplies are rather tight, and we still have a problem in Ukraine. Most of the grain that's been going out through the safe corridors has been corn and other products and not wheat. There's been some wheat going across the border to the west by rail. So supplies are still rather snug in the world. But the trades are really having trouble getting a grasp on that. So it's just been going sideways. And yesterday's rally really took us out of the world wheat market. So prices dropped back down today to try to get us back competitive once again.
Corn, I saw some follow through selling after the lower day yesterday, but the corn market looked like it kind of hit some chart resistance. Do you think, we've already got this lower crop size that we're expecting in the WASDE report kind of already programmed in? Is that why?
Yeah, I think the trade expectations of a 2.5 bushel or so decline are basically priced into this market. The question is, what are we seeing the data to indicate that a small crop may be getting smaller? And particularly if USDA comes in below the trade expectations, I think that's going to fuel that even more. So the trade kind of consolidating here, taking it back a little bit and say, okay, let's square positions and see where we're at. I think there are probably not too many people willing to go short into the report on Monday afternoon because the fear is it could be smaller yet, but we'll have to see.
I'm also curious, Arlen, with the big pullback that we have had in the energy sector. Corn, is it too high priced relative to where energies are at?
As long as we have a biofuel mandate, that's the big question. Of course, blending requirement only is good for as much gasoline as you consume. And if gasoline prices are too high, then that's certainly going to reduce it. But gasoline prices are going the other way, and that should encourage more driving in the weeks ahead with these lower prices. And that means more blending of ethanol. We did see in the latest data that ethanol exports pulled back a little bit, but year to date, they've been very strong. That's been a big boost as well. This is a time of year when we seasonally take some maintenance time, so I'm not too concerned about the numbers. We want to see those numbers bounce back pretty quick, though, as new crop supplies come in.
So crude oil did at least hold that $80 mark here today. Do you think we've kind of put in a little bit of a low here for a while or not?
The markets trade differently than they used to. Now it's all about the algos and the computers making the trading decisions, and the momentum's to the downside until a headline changes things. And so right now I'd be very nervous about bottom picking in this market. The charts kind of look ugly, and I certainly think that the risk is for further downside weakness until or unless we get a headline to turn those algos around.
Gotcha. So the soybean market managed to come back here after kind of taking out the August lows. So talk about this market, because we've been struggling here with the ideas of a record crop size, but how much of that too is already programmed into this price?
Well, the agronomist in me says that if we have small seed problems with corn, we should with soybeans as well. And I'm hearing those anecdotal reports, but yet our survey even says that, it's basically a trend yield when you put the good and the bad together. So far, most of the privates have as well. So we'll see what USDA comes up with now from their actual field samples. But as long as the data shows that we're looking somewhere close to trend, with some of the softer demand out there, I think we have to be concerned with ending stocks having a 3 handle instead of a 2. And then it starts becoming a little bit more bearish for the soybeans. Yes, we do have the biofuels coming on that are going to be strong, but right now it looks like we're going to have the soybeans to crush, and I think we're going to see crush really exceed USDA's expectations, maybe as much as 75-80 million bushels this coming year, but exports could fall significantly below, maybe as much as 150 million bushels below where USDA is currently at. Argentina is currently offering their deal of 200 pesos per dollar for soybeans that farmers sell the rest of the month. That's been a big success for them so far. They mostly process soybeans, but Chinese buyers found that they could buy some cheap soybeans when Argentina did that, and that takes demand away from the U.S. this fall. And so that's why I'm not very bullish on demand on the export front. And I think we're probably looking at larger stocks unless this crop gets smaller.
Yeah, you had to anticipate that China was going to take advantage of that Argentina situation, but also their exports, or their imports, I should say, of soy are down for the year. So is that slowdown economically? Is that COVID? What is that?
Yeah, it's a combination of the zero tolerance policy toward COVID, which really shut down the industry, locked people in their homes. They eat, consume things differently. But hog margins are really going up. So I think we're going to see improvement over the coming year, particularly as we get into the last quarter this year and into the first quarter next year, things start to improve. But unfortunately, we got a big Brazil crop coming on unless La Nina shortens it. And
Okay.
that, again, is going to mean more of it to Brazil.
So cattle market, we did see steady cash in the south, maybe a little lower in the north, but is that what we're trading right now? Because that market looked good technically, but it looks like, maybe we've hit some resistance on the charts.
Yeah, the trade was really disappointed in the cash trade this week. We were hoping for firmer, and we got steady, maybe even a little bit weaker in the north, as you said. And so they showed that in the board today with weaker board prices.
And what about the hog market? The cash market, boy, just plunged, but do you think we're getting to a point where we can start stabilizing both the cash and the futures here?
Every time the October contract gets below 90, we see short covering come in. And that looks like most of what it is because open interest drops on that. But the cash market, as he says, trending lower. October kind of holding up because it needs to converge with the cash market. But the deferred contracts are showing that weakness. Larger supplies going into the fourth quarter and heavier carcass weights and soft consumer demand right now with the recession fears lingering.
Okay, thanks so much as always. That's Arlen Suderman with StoneX Financial.